Welcome back, everyone. As always, it is a blessing to be here. Before we dive in, do me a quick favor. Hit that like button, share this with someone who needs to understand what's happening right now, and subscribe with notifications on so you don't miss what's coming next. Today, I'm connecting three dots that nobody else is putting together. The Clarity Act gaining real momentum in Congress, XRP user count breaking above 150,000 for the first time since the bull market peak, and institutional money quietly accumulating while Binance holdings hit a 5-month low. This isn't coincidence. This is the adoption framework crystallizing in real time. First thing I always do, I pull up CoinMarketCap and give us the full picture. The total crypto market cap is sitting at $2.24 trillion. Bitcoin dominance is sitting at 58.8%. Fear and greed is at 31, which puts us in fear territory, and I'll tell you what that means for XRP in a moment. XRP is trading at $1.134. That's down 0.32% in the last 24 hours. Bitcoin is at $65,702. Ethereum at $1,927. Now here's what I'm seeing. This is a quiet consolidation day. Fear reading tells you retail is cautious, but when I look under the hood at what's actually moving, the smart money story is completely different, and that's exactly what we're unpacking today. Now, with that market picture in mind, let me pull up CoinMarketCap and show you what's happening with XRP specifically. We're at $1.1342, down 0.32% in the last 24 hours, and on the surface, that looks like just another sideways day. But here's what the price isn't telling you. Let me pull up this article from U.Today because this is the signal everyone's missing. Right here it says XRP user count soars above 150,000. Is XRP regaining bull market usage levels? And if we scroll down, they're showing that active addresses on the XRP ledger have crossed 150,000 for the first time since the peak of the last bull cycle. This part right here is the one I want you to focus on. User count doesn't surge in a vacuum. This isn't speculation. This is actual network usage climbing back to levels we only saw when XRP was trading at multiples of where we are now. Now, why does that matter? Because adoption precedes price. Every single time in crypto history, when you see network activity start to climb before price does, that's your early signal that something real is building. And here's where it gets even more interesting. Let me pull up this post from at Digital Asset Buy. They're asking, I wonder if Ripple was thinking of the billions of AI agents that would come on top of the world's population back then. And that's exactly the point. XRP was architected for institutional scale throughput. We're talking about a system that was designed from day one to handle not just people sending payments, but machines, AI agents, automated systems, all transacting at scale across borders 24/7 with settlement finality in seconds. And this is where the Clarity Act timing becomes critical. Right now, Congress is advancing the most comprehensive crypto regulatory framework we've ever seen in the United States. When that clarity lands, institutions that have been waiting on the sidelines don't have to wait anymore. They can deploy. And here's what I think most people are missing. Let me pull up this article from Tabloid. Right here it says, top investor says XRP was designed for institutions at scale. Here's why. And if we scroll down, they're laying out the architecture, XRP. Ledger was never built for retail speculation. It was built for banks, payment processors, remittance companies, the kind of institutions that move trillions of dollars a day and need a rail system that's fast, cheap, and regulatory compliant. This part right here is what I want you to lock in. When those institutions start onboarding at scale, the user count we're seeing today at 150,000 is nothing. We're talking about the potential for millions of transactions a day once the framework is live and the institutional gates open. And that fear reading of 31 we saw on the fear and greed index, that's retail sitting on the sidelines, nervous, waiting for confirmation. But let me pull up this article from CoinEdition. Binance XRP holdings hit 5-month low, hinting at lower sell pressure. Right here, it says Binance's XRP reserves have dropped to the lowest level in 5 months. And if we scroll down, what that tells us is simple. Coins are moving off exchanges. Lower exchange supply means less immediate sell pressure. And historically, when Binance holdings drop like this, it signals accumulation phase. Somebody is taking XRP off the table, and it's not retail panic selling. It's smart money quietly stacking while the price is still consolidating under $1.20. So here's the thesis: user count surging, Clarity Act momentum building, exchange supply dropping, and institutions designed into the DNA of this ledger starting to see a clear regulatory path forward. That's not a coincidence, that's a convergence. And the market hasn't priced it in yet because most people are still looking at the 24-hour price chart instead of the infrastructure being built underneath it. Now, here's where the technical picture comes in. Let me pull up the chart because the levels we're watching here matter more than ever. XRP is trading at $1.1343 right now. The key support level I'm watching is $1.10. We've tested that zone 3 times in the last 2 weeks and it's held every single time. That's not random. That's a demand zone. Buyers are stepping in there consistently. On the upside, resistance is clear at $1.25. We tried to break it twice in the last month, got rejected both times, but here's what's different now. Volume is starting to build on the bounce of $1.10. And the longer we hold this range between $1.10 and $1.20, the tighter the spring gets. If we zoom out to the weekly chart, you can see we're still in a macro consolidation pattern that started back in April. We've been coiling between $1 and $1.30 for months now. The longer an asset consolidates, the bigger the breakout when it comes. And right now we're sitting right in the middle of that range. The breakout level to watch is $1.32. If we clear that with volume, the next stop is $1.50, then $1.75. Those aren't random numbers, those are Fibonacci extensions from the last major move, and they line up with historical resistance levels that acted as support during the 2025 run. On the downside, if we lose $1.10, the next support is $1 psychological, and below that 0.95 is the line in the sand. But given what we're seeing with exchange supply dropping and user count surging, I think the probability of breaking down from here is low unless Bitcoin completely rolls over, and I'll get to that in a second. And that brings me to Bitcoin because the macro structure here matters. BTC is at $65,702, down 0.42% today. Bitcoin's holding the $65,000 level, which is critical. That's the breakout point from the consolidation we've been in since June. If Bitcoin holds here and starts pushing towards $70,000, that's rocket fuel for alts, especially XRP. Historically, when Bitcoin consolidates and alt fundamentals improve, that's when you see the biggest alt runs. Let me give you 2 parallels. In September 2020, Bitcoin consolidated between $10,000 and $11,000 for 6 weeks. Everyone thought the rally was over. Then in October, BTC broke out, and by December, XRP went from $0.50 to $1.90 in 3 weeks. That's a 280% move. The setup was identical. Bitcoin consolidation, regulatory clarity, improving, XRP infrastructure, news accelerating. Second parallel, March 2024, Bitcoin held $60,000 for a month. Everyone got bored. Then when it broke to $70,000, XRP ran from $0.80 to $1.40 in 2 weeks. Same pattern, consolidation, then explosion. Right now, BTC is holding $65,000. XRP is consolidating under $1.20. And the infrastructure narrative is accelerating. If history repeats, and it Decrypton does, we're in the boring phase right before the move. Now let's talk about the smart money because this is where the story gets really interesting. Let me pull up that CoinEdition article again. Binance XRP holdings hit 5-month low. This is a 5-month low in exchange reserves. When supply leaves exchanges, it's either going into cold storage, long-term holders taking coins off the market, or it's moving into institutional custody. Either way, it's bullish. Less supply available to sell means any demand spike moves the price harder. And we're not just seeing this on Binance. Whale wallets holding over 10 million XRP have been accumulating steadily since May. The data shows net inflows into large wallets increasing by 8% over the last 60 days. That's not retail. Retail doesn't move in 10 million XRP blocks. That's funds, family offices, institutions that are positioning ahead of the Clarity Act passage. And let me pull up this article from Times Tabloid again because this is the part most people aren't connecting. Right here it says, XRP was designed for institutions at scale. The architecture supports 1,500 transactions per second with settlement finality in 3 to 5 seconds and transaction costs under a penny. Compare that to CoinEdition, which takes days and costs $25 to $50 per transaction. When banks and payment processors start migrating onto ISO 222 rails, and XRP is one of the few assets natively built for that standard, the volume that flows through this network isn't speculative, it's operational, it's a real economic activity. ISO 222 goes live globally in phases through 2025 and into 2026. We're in the middle of that rollout right now. Banks around the world are upgrading their messaging systems to comply with the new standard. XRP Ledger is ISO 222 compatible out of the box. That's not a talking point, that's an infrastructural advantage that matters when trillions of dollars in cross-border payments start moving onto the new rails. And this is exactly why the Clarity Act timing matters so much. Once US regulatory clarity is locked in, American financial institutions can deploy without legal risk. Right now, they're watching from the sidelines. The moment that framework is live, the floodgates open. And user count breaking 150,000 right now before that clarity is even finalized. That tells me early adopters and forward-looking institutions are already onboarding, testing, building infrastructure. When the regulatory green light hits, they're ready to scale immediately. Now let's zoom out to the bigger macro picture, because Bitcoin and XRP don't trade in a vacuum. The stock market today, S&P 500 is down 0.14%, Nasdaq down 0.57%, Dow basically flat. We're in a risk-off environment today. Fear and greed at 31 confirms that. But here's what I'm watching. When traditional markets consolidate and crypto holds support, that's actually bullish. It means crypto is decoupling from the broader risk-off move. Gold is down 1.21% today, sitting at $4,096. Crude oil is up 4% at $90.34, which tells you there's macro uncertainty around energy and inflation. In that environment, hard assets and decentralized assets tend to outperform over time. Bitcoin is digital gold. XRP is digital infrastructure for money movement. Both have a place in a portfolio when inflation and currency instability are in play. And let me be clear about where we are in the cycle. I think Bitcoin bottomed in the $50,000 range earlier this year. Grayscale's Zach Pandel said this week, let me pull up this article from Cointelegraph, Bitcoin may have bottomed before its traditional cycle low. Right here, he's making the case that the 4-year halving cycle is compressing, and we may have already seen the low for this cycle back in the spring. If that's true, and I think there's a strong case for it, we're in the early phase of the next leg up, not the late phase of a top. That means the setup right now for XRP is extremely asymmetric. You're buying at $1.13 in a consolidation range, with the macro DI likely in, regulatory clarity coming, institutional infrastructure being built, and user count surging. The risk reward here is heavily skewed to the upside. Let me talk about one other coin quickly because it connects to the broader alt narrative. HETH is up 3.38% today, leading the market. HETH is another enterprise-focused blockchain with institutional backing. When enterprise coins start leading, that tells you where the money is rotating, not into meme coins, not into speculative plays, into infrastructure with real institutional use cases. That rotation benefits XRP more than almost any other asset because XRP is the king of institutional infrastructure in crypto. If capital is flowing into that narrative, XRP is the top destination. Now let me play devil's advocate for a second because this is important. What's the bear case? What would make me change my mind on this thesis? Here's what I'm watching. If Bitcoin breaks below $60,000 and starts heading toward $55,000, that would signal the macro cycle thesis is wrong and we're headed into a deeper correction. In that scenario, XRP likely tests $1 and potentially $0.85. I don't think that's the high probability outcome, but if BTC loses $60,000, I'm reassessing. Second risk, if the Clarity Act gets delayed or watered down in Congress, that takes away the near-term catalyst for institutional onboarding. It doesn't kill the long-term thesis, but it pushes the timeline out, and in that scenario, XRP could stay range-bound between $1 and $1.30 for another 6 to 9 months. Third risk, regulatory crackdown outside the US. If Europe or Asia starts tightening crypto rules in a way that limits institutional adoption, that slows the ISO 222 rollout narrative, again, I don't see that as the likely path, but it's a risk worth naming. So I'm not sitting here telling you this is a guaranteed moonshot tomorrow. I'm telling you the setup is extremely favorable, the risk reward is asymmetric, and the infrastructure is being built in real time. but you have to manage risk. You have to know your levels. You have to have a plan for both scenarios. This is also why I keep my own XRP off exchanges and cold storage on a ledger. Links in the description if you want the one I use. Now let me give you my 3 scenarios and tell you which one I'm betting on. Bull case. Bitcoin breaks $70,000 in the next 3 weeks. Clarity Act momentum continues. And XRP breaks $1.32 with volume. In that scenario, I think we're at $1.75 by mid-August and potentially testing $200 by September. The trigger for that scenario is BTC holding $65,000 here and pushing higher, plus any headline confirmation on the Clarity Act moving through committee. Probability, I put that at 40%. Base case, we stay range bound between $1.10 and $1.25 for another 4 to 6 weeks while Bitcoin consolidates and the macro picture clarifies. In that scenario, XRP doesn't break out yet, but it doesn't break down either. We just coil tighter, user count keeps climbing, exchange supply keeps dropping, and we set up for a bigger move in Q4. Probability at 50%. This is the most likely near-term path. Bear case, Bitcoin loses $60,000, macro risk intensifies, and XRP tests $120. If that happens, I'm looking to add more in the 0.95 to $1.05 range because the long-term thesis doesn't change, but the entry point gets better. Probability 10%. I think the macro bottom is in, but if I'm wrong, that's the level I'm watching. So which one do I think is most likely? The base case, I think we consolidate here for another few weeks. Bitcoin holds $65,000, XRP holds $1.10, and we build energy for the next leg. But I'm positioned for the bull case, and I'm prepared for the bear case. That's how you trade asymmetric setups. You don't need to be right about the timing. You need to be right about the structure, and the structure here is bullish. Here's what I'm watching this week. First, Bitcoin at $65,000. If we hold that level through Friday, that's confirmation the consolidation is healthy. Second, XRP at $1.10. As long as we're above that support, I'm not worried about downside. Third, any news on the Clarity Act. If we get committee movement or a vote scheduled, that's a catalyst that could break us out of this range immediately. And fourth, exchange supply. If Binance XRP holdings keep dropping, that confirms the accumulation phase is ongoing. And here's what you should do. If you're not in XRP yet, $1.10 to $1.15 is a solid entry range for a long-term hold. If you're already in, you hold through this consolidation and you add on any dip to $1.10 if we get one. If you're trading shorter term, you watch the $1.25 breakout. If we clear that with volume, that's your signal to add more. And if you're risk averse, you wait for the breakout above $1.32 and you take the confirmation over the early entry. All of those strategies are valid. It just depends on your risk tolerance and time horizon. But here's the one thing I want you to walk away with today. XRP user count. Breaking 150,000, Clarity Act, momentum building, Binance supply hitting 5-month lows, and institutional infrastructure being built in real time is not a coincidence. It's a convergence, and the market hasn't priced it in yet. If this breakdown gave you clarity on what's actually happening under the surface, smash that like button, share this with someone who's still only watching the 24-hour price chart, and if you haven't subscribed yet, hit that button and ring the bell because this is the kind of analysis you won't get anywhere else. Drop your XRP price target for end of August in the comments. I want to know where you think we're headed. As always, it is a blessing. See you tomorrow.